Good evening and welcome to a brand new show of Markets Tomorrow. I'm Nikunj Dalmia. A flat day of trade for large cap stocks, but another non-inspirational day for mid cap stocks which continued their downward spiral irrespective of strong global cues. Rate sensitive stocks led the decline on Monday and capital goods stocks came under intense pressure today. Tomorrow, of course, is the last day of the Jan series, which where things are stacked up ahead of FNO expiry. Let's discuss that for you in this edition of Markets Tomorrow. And joining me on this edition of Markets Tomorrow, my three wise men for the day are Rajat Rajgadia. He represents Motilal Oswal Securities. Along with him, Sudip Bandyopadhyay, Managing Director and Chief Executive Officer of Testimony Securities, and Sandeep Wagle, Managing Director of Apta Technical Advisory Services. So let me kickstart today's panel discussion with you, Sandeep Wagle. Sandeep, we've been discussing, and I will sound repetitive with this one because this is my favorite first bet question, which is ignore the Nifty, look at the mid-cap space.
Nikunj, first of all, a big thank you for calling me wise. I hope the market also treats me that way. The way the market is behaving these days, all my wisdom is going to the dogs is what I feel.
Experience and age, Sandeep, that's what differentiates you.
Yes, Nikunj, thank you so much once again. You said it right. The Nifty is not a true indication. I have been maintaining this for the past couple of weeks' time. The Nifty at the moment is not a true indication of what is happening to individual stocks. You have stocks which are moving up and down. And if you follow them, I think you had an Axis Bank which moved up one way yesterday. You had a GAIL which went down one way. There are some mid-cap stocks which are moving up and down. So I think Nifty will continue this even post-expiry. I don't think that this is only for this expiry. Another week or two probably we will be in the range of 6,000 on the downside and 6,100 on the upside. I would broadly call this directionless. And I think individual stocks will rule the roast and you have to follow them and trade to make money. I mean, there is no point in sticking on to the Nifty. I really don't think we will see a breakdown substantially below 6,000, even if it happens 50 points here or there. And I don't think immediately we will break 6,100, 6,120. So this 100, 120 point band is what the Nifty is in for, probably for a week or two.
Sudeep, are market internals making you nervous, or do you think this is the calm before the storm?
Well, I think it's the calm before the storm, Nikunj. In fact, whatever action we had to see, we have pretty much seen as in terms of RBI credit policy, in terms of by and large, all the quarterly numbers are out. Of course, we have ICICI Bank to look out for tomorrow. But by and large, they are out. So now I think it's a wait for the budget and wait for other, macro indicators which will emerge in the near term. I think market will be waiting with a bated breath for all these things to happen. So for next 2-3 weeks, I think it's going to be sideways. It's going to be range bound, whatever term you use to define the market. But we won't see anything clearly emerging. The next biggest trigger for the year will be the budget.
Sandeep, is that your understanding as well, that we should not expect price action or volume action in large cap stocks, at least in the run up to the budget?
I would absolutely agree with Sudeep in no uncertain terms, absolutely what he said, and I think he has given me a cue. The budget is the next point. And even post-budget, I don't think, the bias is on the long term is bullish. 59, 50 may be tested in case of something not expected that comes out in the budget. But I don't think really that we will go in for 57, 55, that kind of fall I don't expect. So long term is very, very bullish. Long term when I'm talking of...
Okay. Sorry for that interruption, but Rajat is also... standing by. Rajat, good evening to you once again. Rajat, let's first start with autos and what are your thoughts on autos? The street is clearly divided on how to approach autos. Some are of the view that discretionary spend is coming under pressure and auto stocks, they qualify as a sell, but majority of the market men still are of the view that interest rates have come down and that will only help auto sales, auto stocks.
But I think in autos, the four-wheelers will continue to do well, while you will have the share of volatility in stock like Tata Motors. I think Maruti is definitely looking for a much better FY14 on the earnings, and that's also getting reflected into the way the stock is doing well. I think M&M is another stock which should start looking interesting from now. It has been the underperformer amongst the 3 4-wheeler names. But if rates start easing off and we start seeing some pickup into the domestic space, the valuations are very, very attractive for this stock to start leading the next round of upgrade into the earnings and the valuations also. So within the 4-wheeler, I think Maruti continues with the momentum, but M&M could be a stock which can start showing some comeback in the performance from here.
Sudeep Bandyopadhyay, Titan Industries, they came out with absolutely cracking set of numbers. Markets were expecting nothing. The stock had corrected ahead of numbers. The company has once again delivered.
Absolutely, Nikunj. I think our view on this FMCG has been quite similar. I think consumption demand is there and is going to remain very strong in the near future as well. Yes, Titan had certain concerns because there were a lot of duty and a lot of structural changes being proposed by the government. There were discussions that things may not be too good for the gold business, gold jewelry business. But our belief is that in spite of all this, a little bit of tinkering with duties and other structures which may happen in the near future, something has happened and something may happen in the near future. The demand for gold, demand for the products of Titan will continue to remain strong, and their sterling performance into the next fiscal also will continue. So we remain bullish on Titan. Of course, you have to see what level you are entering this stock. That's pretty much true for everything.
Sandeep Bagale, Titan Industries, do you think the correction in Titan is over?
As a trade, I am very, very comfortable taking a long trade as of the prices today, and if it manages to sustain and hold about 280, I think the move can extend to around 295 to 300. I don't have a much bigger view than that in the immediate 2 to 3 months. I mean, at that level, 290 to 300, some selling is likely. So medium term, 260 to 290, 295 is the band I will talk of, and one can trade in this band.
Sandeep, 50 rupees exactly for Nalco. Are you impressed with today's price action in Nalco?
Nikunj, more than the price action, I am impressed with the volume action. And when I say I see a 10% move, that sounds quite exciting. But the fact is, it is only a 5 rupee move. So I don't see the move extend beyond 55. And that is where one should book out. The weekly trend still remains probably bearish to sideways. And a lot of selling would emerge there unless it seriously takes out 58.60. Only then we can talk of a 75-80 target. As of now, I would say book profits in the range of 55-56 and exit the stock.
Sudeep, high commodity prices, is that a challenge? Is that something which markets are not factoring in at the current juncture? Are markets prepared for an oil shock?
Well, Nikunj, you're right. I think the high commodity prices are a matter of huge concern for Indian economy, particularly the oil prices. I think that's one single commodity which can really, really affect India badly. But having said that, our view has been that commodity prices will not go beyond a point, and it will definitely not continue to rise in a manner which will have significant negative impact on Indian economy and other global economies. Well, as we know, the commodity price going up does positively impact economies like China, Australia and other economies, but there are significant other major European, US and other emerging markets which do get impacted negatively when commodity prices rises. The economists are not predicting oil prices to really shoot up in the current fiscal. So I'm not too worried about commodity prices upsetting the growth as far as India is concerned. The biggest factor, biggest challenge for India is to contain the fiscal deficit, and I think the finance ministry and the government is working towards doing something about it. If a couple of these disinvestments go through in this fiscal, I think the balance will tilt in favor of reduction in deficit from the current levels. Next fiscal, of course, is a different story. We'll have to wait for the monsoon. We'll have to wait for next year's budget plans and to take a call on how things will move from here on.
Rajat, what are your thoughts on pharma stocks? Now, pharma is considered as a classic defensive, but at a time when generally risk-on trade is making a comeback, do you think pharma stocks will still outperform Indian markets?
Well, this quarter when we did the preview pharma was looking like the best performing sector because two things which are working well for them. First, their business models are very robust right now in terms of growth. And secondly, I think the currency of 54, 55 is really helping a lot of these companies to deliver very well. Important to note, many of the Indian pharma companies had set up their capex for the last 2-3 years when currency on an average was 45, 46. And now when the commissioning is happening, they are realizing sales at a currency of 54, 55. I think that itself is pushing up the ratios significantly for these companies. And while we don't look at pharma as a generic sector, there are a lot of individual business models which stand out. Models like Divi's, models like Dr. Reddy, Lupin, Cadila. I think each one is a story on its own. They have done very well as a pack, and we think that at least in individual stocks, there are case for making more returns from here.
Ajit, as a house, you're also bullish on media. Now, why is that? Most of the media stocks in last 3 months, they have run up by a good solid 20 to 50%. After the recent run-up, are you still bullish on media?
But I think this will remain one of the most exciting sector for investors to be in, and not just the broadcasters, but also some of the print media names where we reinitiated coverage very recently. We think if you look at the balance sheets of companies like Zee, Sun, Jagran, DB, a lot of these balance sheets provide you a lot of comfort at the bottom of their business cycles, and the managements have held on the payouts, etc., reasonably well. We are looking at a pickup in the ad revenue across businesses over the next 2 years, and plus if you get the kick from the subscription revenue, I think these companies can continue to trade at very expensive multiples with earnings growth where the upgrade cycle will continue, and cash flows which will support higher payouts for them over the next few years. So as a space, both broadcasters and print media are the ones where we would remain invested in.
Sunil Bagli, Zee, today the stock corrected, but in general that stock has been an outperformer. Do you think Zee, maybe not this month, maybe not next month, but the next 3 months, do you think Zee could cross 250?
I'm not very clear on that, Nikunj. In case it breaks 215, 210, I think it can come down because the monthly pattern suggests some distribution, though it can go back to 230, 235 at a current level of 220 or so. If I have bought at lower levels at 170, 180, which we had recommended a few months back, I would think of booking profits.